Hi everyone, welcome back to the individual taxation classes. This is in continuation of chapter 1, which is preliminary work and the taxpayer data. In this particular video, I'll be walking you through in detail about W4. Yes, so W4 is the form which an individual submit to their employer so that employer has the sufficient information to withhold the taxes of the respective individual. So this is very important. So let's dive into for more detail. Hi everyone, welcome back to the US taxation class. So before the break, we have discussed a couple of tax credits, right? So now we'll be continuing the same, and I think we have covered 5 of them out of 8. So we'll be finishing off rest of the 3 tax credit, and after that we'll do some practice questions, right? So let me present my screen and take you through what all we have done. So, and so far we have covered till foreign tax. So we have covered 7. Okay, so quickly let me scroll through all the tax credit. Yeah. So we did for child tax credit, we did for child and dependent care credit. Then after we did for credit for elderly or disabled people. And then we have cracked credit for adoption expenses, credit for contribution, and then we invested good amount of time in understanding education tax credit, which is like non-refundable tax credit. There we studied both of them, both like American opportunity tax credit and lifetime learning credit. And then lastly, before going on a break, we finish off foreign tax credit, and we have done certain example for that also. Now we are jumping on to the general business credit. So this one is common for individual taxation as well as your business taxation, which is your second part of examination. Because like I thought to kept it here so that like there might be a possibility like individual might be doing business as a sole proprietor or partnership or in S corporation. So maybe in that case it may hit your individual taxation exam, but more important, this is for business taxation part, which is your part 2 of the E exam. So but let's crack it out here only, and then it will be more of revision when you do it with the uh, business taxes, right? So general business credits include like 6 category of credit. One is investment credit, that is for the amount you pay for rehabilitation, that is like capital expenditure you make for the rehabilitation of your office or something like that, right? So that one is investment credit for rehabilitation, where you are doing like overall renovation of your facilities kind of thing. Second one is work opportunity credit. So that is more from like employer side who are providing opportunities to certain category of employee. Third one is research activity credit. When you do investment on research and innovation, you get certain tax credit. Then D is low income housing credit. So this is majorly for the construction companies who help in building or who build like housing society for lower group of income people. The next one is disable access credit. This is for investment as an employer we make for disabled people. Like in US, I know like Shubham, you was there, so you might have seen like almost in all shops or all you can say offices, there are separate parking lot for disabled people, right? So you might have
Yes, sir.
seen like the separate, you can say, uh, entry and exit for disabled people, right? So all those expenditure that company make, so they get certain tax credit for those to helping disabled people, right? We'll be discussing more in detail. And then last one is employer provide childcare credit, where like the company like EY, PwC, and all this big company, they have a separate childcare facilities in their office where employee can drop their kids over there, and there are nannies and all, you can say, stuff for the kids to play around is being there, and all these facilities is being provided by the employer, and what all tax credit as an employer we get, right? So that's the reason I said this section is more related to business taxes, but it may be possible you are running a business as a sole proprietor or partnership, and you might be investing and doing all these things, then you can also avail the tax credit on those respective areas, right? So total deduction for considering all these six things would be comes under the general business credit, and which is like lower of your regular tax minus AMT, alternative minimum tax, or 25,000 plus 75% of regular tax minus 25,000, whichever is lower, right? For example, let's say your regular tax is, let's say, $100,000, and your AMT, alternate minimum tax, is, let's say, $50,000. So first point is 100,000 minus 50,000, that is $50,000. Second is $25,000 plus 75% of regular tax, which is $100,000, minus 25,000, which is 75,000, multiplied by 75%, let's say 37,500 plus 25,000, that is around $62,500. So whichever is lower, so 50,000 is lower, so maximum deduction for all these six category, or maximum credit for all these six category, will be $50,000. Did you understand, or shall I write it on whiteboard? Yes, no, kuch to bolo. Have you got the example what I said, or do you want me to write in the whiteboard?
No.
Okay. So now any unused credit may be carried back for a period of 1 year and can be carried forward for 20 years. So carry forward, we all know, like if like today my tax liability is less compared to the tax credit, so whatever is the difference, I can carry forward for the next year, and in the future tax liability, I can reduce that amount up to 20 years. So carry back means, like, in the previous year, if you have gain and if you have paid taxes, then you can claim the refund for that. Does that make sense?
Yes, sir.
Right? Or maybe let
Can you
me
say
draw.
that again, sir? Can you repeat?
Yeah, let me draw it for you. Let me draw it for you. Otherwise, some people understand, some may not. Can you all see whiteboard?
Yes.
So here, like, first, let's understand the initial example we were discussing. So your regular tax is $100,000, right? And your alternate minimum tax is $50,000. So the A point says regular tax minus AMT, which is 50,000, right? $50,000. Or B point says, what B point says? $25,000 plus 75% of regular tax, $100,000 minus $25,000. How much is this? Can somebody help me in doing the math?
So it's 82 to 50 plus 25,000 only.
So
I
this
think
is 81250. Have I done the math right? Is it time to your math?
Yes.
So whichever is lower, that is 50,000. So maximum tax credit for general business is 50,000 you can do, right? That is the first point which we understood. And the second point, it says any unused credit may be carried back 1 year and carried forward 2 years. So for example, this year your tax credit is 50,000, right? And this tax credit you will be reducing from regular taxes. So in this example, it's not getting fit. But let's take another example. Example 2. Example 2 says your regular tax is, let's say, $100,000, and now you have general business tax credit of let's say $250,000. So your general business tax credit is $250,000. So in this year, you can consume maximum how much? 100,000. So your carry forward will be $150,000. That means you have more tax credit than the tax liability payable by 150,000. Yes, no? Yes, no? Guys?
Yes.
Yes, everyone. So this you can carry forward up to 20 years, right? And you can carry back up to 1 year.
1 year.
That means this we all know, right? Carry forward we all understand now. We have already discussed a couple of examples, right? So what is carry back? That means if in previous year your tax payable was, let's say, $100,000. So from this 150 you can carry back $100,000 and you can make your liability zero. And if you have already paid this, then you can claim refund. Make sense? So if in the previous year you have already paid the tax liability, then from this carry back of 1 year, you can update the previous year return and claim the income tax return refund of $100,000. Make sense? That is called carry back.
Yes,
Any
sir.
doubt here?
No.
Rajat, Mayank, Vivek, everyone good?
Clear, sir. Clear.
So now, now coming to the first point. So far what we have discussed is at consolidated level called general business credit. Now in the general business credit, there are 6 categories of credit. So we'll be discussing one by one. So first of all, we discussed like overall how much tax credit is being available, and from that tax credit, how you can utilize against the current tax payable, and if it is more, then how much you can carry forward and how much you can carry back. If you carry back, then you can claim the refund as well, right? This is what we understood so far. Now we are jumping one by one into the respective category, which is comes under the general business tax category. The first one is investment credit for rehabilitation. If this credit is being allowed to the taxpayer for making an expenditure to rehabilitate old commercial building to the new building, or any industrial building to the new building, or to certified historical structure like museum or historical buildings, etc. Right? So any expenditure you made for the rehabilitation of old commercial or industrial building to revive that to the new building, right? Or if you are making any capital expenditure on any historical structure like museum or historical building or something like that, right? Then you are being eligible for the investment credit for rehabilitation.
Sir, good evening.
Vikas sir, can you hear us?
Yes, sir. बढ़िया. तबीयत
Sir,
ठीक नहीं
I
थी.
know you are badhiya, but put on mute. People do not concentrate. Huh? So next thing is credit. So how much tax credit you will receive? That is 20% of expenditure utilized equally over the period of 5 years. Right? That's a drawback of virtual meetings, or you can say virtual class. People get busy in their own way. Okay, sorry about that. So like credit is 20% of expenditure utilized equally over the period of 5 years. So whatever is your tax credit, right, you can avail only 1/5 in a particular year. So you'll be taking the overall credit over the period of 5 years. So let's see this example over here. Investment to rehabilitate an old commercial building was $1 million, right? The investment credit is, maximum credit is 20% of the capital expenditure, that is $200,000, right? And then this $200,000, if you are availing tax credit, then you need to reduce the asset base because you cannot take double tax benefits. So if you are keeping the same asset base, then you will be taking the depreciation benefit, right? So if you are taking the tax credit, you need to reduce the asset base and you should not be claiming the depreciation expense on that amount which you have taken as a tax credit. So that is the reason from the tax base, it will reduce whatever the tax credit you are planning to avail. So now future tax base is $800,000 instead of $1 million, right? So on 800,000 asset base, you will be depreciate over the life of the building. Let's say it is 39 years, then straight line basis are 39 years, right? And investment credit is $200,000, but that you will be utilizing over the period of 5 years. That is 200,000 divided by 5, that is 40,000 every year in the period of 5 years. So that's how you'll be utilizing that investment credit for rehabilitation. Make sense? So first question is, to what category of capital expenditure this rehabilitation credit is allowed?
1/5, sir.
Say that again.
1/5, sir.
No.
Or
I'm saying what category of investment or expenditure this credit is allowed.
Commercial industrial building.
Say that again.
Commercial and industrial building.
Yes, commercial and industrial building or certified historical structure, right? If you are making expenditure on the rehabilitation of old commercial buildings, industrial building, or the historical structure, right? Then only this investment credit for rehabilitation is allowed, right? How much is it allowed?
Limited.
20% of the expenditure you have made, right? Third question is, if you are taking the tax credit, how much money you need to reduce from the asset base? If you are taking tax credit, then how much amount you will be reducing from the asset base? Because
Sir, base is the semester.
Investment credit.
Investment credit. Investment credit, sir.
What is investment credit?
Sir, how much we have invested?
20% of the expenditure. 20% of the expenditure.
Yeah, no, I'm asking to Vikas. How much is investment credit?
20%, sir. Credit is 20% of the expenditure utilized equally over the period of 5 years, sir.
So what kind of investment expenditure are being eligible for rehabilitation credit?
Type of expenditure.
What type of expenditure?
Sir, in the expenditures which are incurred to rehabilitate old commercial industrial building as well as certified historic structures.
So what are old commercial building and certified historical structures?
Historical monuments like monuments, historical building, church, temples, etc. and all historical. और ये commercial हो गए सर, जितना भी नॉन रेजिडेंशियल बिल्डिंग ऑफ पर्सनल है, ऑफ पर्सनल यूज है, कोई सोसाइटी है वो बेकार पड़ी है बहुत टाइम से, आई गेस, तो उसको रिहैबिलिटेट करना है फॉर कमर्शियल यूज, तो वही होगा मेरे ख्याल से सर ये.
And to how much years you can avail the benefit of
20 years,
credit?
sir, 20 years forward or 1 year back.
ऐसा कुछ है? How about others? How many years we can take tax credit? How many years we can take tax credit for investment credit for rehabilitation?
Carried back 1 year, forward 20 years.
I heard your answer. I'm just talking to other. How many years we can take credit of investment?
So 5 years.
For 5 years? How about
Yes,
others? 5 year or 20 years? Mayank?
Sir, I also just read 5 years, that usually you utilize usually over the period of 5 years. So it's written. So my answer will be for 5 only.
Yeah, Garima, Rajat?
So 5 years.
But how you will be utilizing over the period of 5 years? How we will be utilizing over the period of 5 years?
20% each year.
20% each year. So yeah, if for example $1 million we have spent, so 20% of that is being allowed as a investment credit for rehabilitation, right? So that is $200,000. So out of this $200,000, how much tax credit we can avail in current year? 20% of $200,000, that is $40,000. Yes, no, right? And rest of the $160,000 we will be utilizing in equal installment in following 4 years, right? Make sense? Because
like $40,000 each year for the 5 years of period.
yes. Hanji, because make sense?
So there is no limit on the expenditure incurred to rehabilitate commercial buildings.
Yes.
This is like what the Trump did in 1980s, yeah, to avail the tax credit.
Yes. Right? So $40,000 each year over the period of 5 years. But one thing you need to remember, you need to reduce that $200,000 from $1 million to consider as the basis of asset. Your asset base will reduce by the tax credit which you are planning to avail over the period of 5 years. That is something you need to keep in mind to avoid any double tax benefits. Why it is double tax benefit? If you do not reduce amount from the asset base, then you are claiming depreciation and you are already taking tax credit. So you'll be getting into double tax benefits. To avoid that double tax benefit, you need to reduce the amount of tax credit from the asset base. Make sense? Mayank, Garima, Rajat?
Yes, sir.
So far, so good?
Yes, sir.
Okay. So next one is work opportunity credit. So this credit is being available to the employer for hiring individual from certain target group. Like in India, you might have heard like the government of India have certain reserve quota for SC, ST, OBC category, right? Same way in US, they promote the employer to hire from certain target group, which are very underprivileged group, like who have consistently failed significant barrier to employment, right? For that, they need to file with the IRS form 8850, which is pre-screening notice and certification request for the work opportunity credit. So in US, if you are employer and you wanted to take any tax credit or benefit, so for that you need to first apply with the IRS and then you need to open up that scheme, right? So the government provide certain tax credit to the employer if they hire from certain specified targeted group, which are more of underprivileged group, right? So the credit will be 40% of the first $6,000 for one employee. That is 40% multiplied by 6,000, that is $2,400. And maximum credit is for 4 employees, which is 40% of $24,000, that is $9,600. So each employer can avail up to 40% of $6,000 for one employee, and maximum limit is for 4 employees, that is $9,600, right? And how this credit actually work? So 40% if the employee work for more than 400 hours in a year, right? If employee work in your company, in your organization for, let's say, less than 40%, but more than 25%, then, less than $400, but more than $120, then 25% for that employee. And if employee has worked for less than 120 hours in a year, then only 20% is allowed. So this slab you need to remember. So if employee has worked for more than 400 hours. So normally in a month we consider 160 hours, right? If I do simple math, if like employee has worked for 2.5 years in a month, then you will be getting a 40% per employee, right? And if employee is working with you for, let's say, 1 month to 2 months, right, then 25%. And if less than 120 hours, that means like 3 weeks. So like 40 hours a week, if you say, so less than 3 weeks, then only 20%. Make sense?
Yes, sir.
Reduce the wages expense for calculation of taxable income. So if you are taking the tax credit, then whatever the tax credit amount you are taking, you need to reduce that from the expenses to avoid double tax benefits, right? So maybe let's draw a small example on this for better clarification. So, for example, Mr. X as employer, or you can say sole proprietor, right? And he has, first case, 1 employee, and second case you have, let's say, 4 employees. And this 1 employee has worked, let's say, 500 hours in year, and this 4 employee, one has worked, let's say, 500 hours, one has worked, let's say, 300 hours, one has worked, let's say, 110 hours, and one has worked, let's say, 80 hours, right? So how much tax credit will be available to in this category? So here it is very much straightforward. 40% multiplied by $6,000. How much is it? $2,400, right? So in this case of scenario, at the rate of 40%, in this case of scenario, 25%, in this case of scenario, 20%, in this case of scenario, 20%, right? Multiply by 6,000, 6,000, 6,000, 6,000. How much is it? 2,400. What is 25%? 1,500. What is 20%? 1,200. What is 20%? 1,200. Right? So total is how much? 48 plus 5, 49, 59. $5,900. Right? Yes, no? Have I done the math right? $5,900. So this is tax credit.
Total is 6,380.
Say that again.
Total is 6,380.
Sorry, have I done math wrong? How much is it? So 24, 24, 48, 58 plus 5, 63, 6300. Have I done the math right? Yeah.
Yes,
Is it? So $6,300 is the tax credit, right? Whereas my salary cost, let's say, is $50,000. Is $50,000. So then I need to reduce 2,400 from salary cost. Then I need to reduce 6,300 from salary expense. How much is the salary expense? 50,000 minus 2,400, 4,7,600. And what is this? This is 5,3,700. Oh, sorry, 4,3,700. Have I done the math right?
yes.
Right. So your expense in P&L should be this for tax purposes in your tax accounts. Right. You should not show 50,000 as a salary expense. You should not be showing 50,000 as a salary expense. Rather, you'll be showing reduced amount, because for this amount you are taking tax credit. To avoid double tax benefit, you need to reduce that amount from expense, right? Because on expense, you will, if you have expenses, then you will be reducing from the income to reach at AGI. Yes or no? How you calculate AGI? Your gross income
By
minus
deductions.
expenses for deduction, right? If this is, let's say, $100,000 and this is $50,000, so your taxable income is $50,000, right? If in this 50,000, this 2,400 or this 6,300 is there, that means you are paying less taxes, right? Because you are already taking the benefit as a tax credit. So for example, if tax rate is 20%, so tax payable is $10,000, right? So you'll be reducing this 6,300. So you are paying taxes, how much? 3,700 only. Instead of 10,000, you are paying 3,700. So you should not take double benefit of this amount. So that is the reason you need to reduce this amount from here. So instead of 50,000, it should be 43700. Make sense? Yes, no? Any doubt? Yeah, because man, Vivek.
No, sir, not yet.
Clear, sir. Clear.
Clear? Okay, so far we have covered B point as well, right? Now coming to C point, which is research activity credit. So this is for qualified R&D expenditure. If you are a sole proprietor, right, and you are running any business, and that business you are doing some research and development expenditure. So in that case, those research and development expenditure are being eligible for certain tax credit. If in current year, research and development expenditure is more than previous year, so your R&D expenditure